Now, if Capri can hit those numbers, then the stock is a total steal right here. Less than 7 times earnings for a company with double-digit growth? That doesn't make sense. That's an incredible bargain, people. On the other hand, if Capri can't hit those numbers, well, there's a lot less to like, so it all hinges on whether or not to buy what management is selling. And I'm not talking about the merchandise. I'm talking about the estimates. Not everyone is on board. Roxanne Meyer at MKM Partners slashed her price target from $52 to $40 in the wake of the meeting. Her reasoning? Well, listen to this. While hypothetically there should be an attractive runway for sales and margin growth at both Jimmy Choo and Versace, some aspects of the strategy are easier to execute on, such as opening new stores, while others will take time and could yield mixed results, such as expanding handbags for Jimmy Choo, end quote. Meyer continues, in the meantime, sales and margin stability may be tougher to come by at Michael Kors, given the tough wholesale environment, ongoing weakness in watches, and lack of stability in accessories, while it is an investment year in Versace. In other words, she thinks Capri is being fabulously optimistic. Investment year, always a bad sign. There are a lot of moving parts here, a lot of things that can go wrong, and neither Kors nor the Versace brands are in great shape at the moment. Oh, and I do expect no improvement in watches. I think she's right. That was once a very powerful segment, but again, competition from this has gutted the segment. This is the one I've been using. The other day I used the one that was like Toy Story. Oh, that's the breaking news thing. How about this one? It's like completely. But anyway, by the way, I pressed the wrong button and music went off in a big meeting. All right, anyway, other analysts take a much more even-keeled tone. Matthew Boss, the phenomenal retail analyst at J.P. Morgan, explained that the company, it's in show-me mode. Piper Jaffray was guidedly optimistic, saying they believe management, but also acknowledged that the Michael Kors brand has some real problems, especially in luxury handbags. And some were extremely bullish, like Randall Koenig at Jefferies. Right after Capri's announcement, he published a report titled, Buy This Compelling Luxe Brand Portfolio. His rationale? Well, he was willing to give management the benefit of the doubt. He says so himself. We believe management's financial targets are achievable and beatable. And with shares trading at less than 7 times earnings, we urge investors to aggressively buy shares, end quote. Yet he actually thinks Capri is being conservative with some of these targets. He sees an enormous opportunity for Versace in footwear and thinks Capri still has the potential to unlock major cost savings from its recent acquisitions. He describes Kors, Jimmy Choo, and Versace as powerful brands with high margins that can go higher. And if that's the case, Capri stock is indeed ridiculously cheap. Okay, so where do I come down? Now, I do think that Jefferies is being a little too optimistic, but in general, you know what? I'm going to side with the bulls on this one. My reasoning is very simple. I like the risk reward here. I didn't like it higher, but here, even if the bears are right, I think that they'd already baked that into the stock. But if the bulls are right, Capri could have some spectacular upside. Easy call. Plus, as I add a bonus, I actually like management's vision. Capri is now a house of brands, and I really like that the Chinese consumer seems totally enamored of Versace. You know, when I was in Milan for Fashion Week, well, I sure don't sound like Jim Cramer, but when I was in Milan for Fashion Week, I went to the Versace, their showroom. The stuff was, you know, my wife didn't like it, but I thought it was kind of wild and crazy, which I like. Bottom line. Capri Holdings has come down so far, so fast since last September, that when you see a split decision from the analyst community, I think you need to side with the bulls. The company finally has measurable goals that they can evaluate against, and they merely need to deliver on those targets for the stock to go much higher. Worst case, management drops the ball, and Capri continues to get a little lower valuation, and maybe an activist comes in, suggests some changes too. I like that too.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.